Welcome back to Liberty and Finance. We're delighted to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He's going to be joining us in just a moment, and we're going to have live questions. There's already quite a few people in the live chat stream. If you want to submit a question for CEO Andy Schectman, make sure that you have to subscribe to our channel, Liberty and Finance, and then come on into the live chat stream and go ahead and type your questions. We're going to get as many of these answered as we can. So there's no set agenda tonight. We are definitely going to talk on the outlook of the economy, the outlook of the gold and silver markets for 2023, the availability and inventory of physical silver, both on the major metals exchanges as well as in retail investment grade bullion. And we're going to get any of your other questions that we have time for answered here. So Andy Schectman had to reboot his computer. He'll be right back, and we'll get your questions answered. Let's see if there's anything here that I can field while we're waiting for him to join us. I know he's been tracking further progress, or the opposite of progress, depending how you look at it, in the coalition of the BRICS nations in turning away from the US dollar, and what pressure that's going to put on the dollar and the US and prices of anything that's denominated in dollars this year. We've got, in a few days, we're going to have quite a few other guests that you've been looking forward to coming up. Lynn Alden is one of them. Then in about a week and a half, we've got Rick Rule coming back on to talk about unprecedented volatility this year. And he's going to be talking about his new silver boot camp for investors. It's a $99 boot camp, and we're going to put details on how to sign up for that in the description of this video. So don't miss out on that opportunity. A lot of people, hundreds, signed up for last year's uranium investing boot camp. This is a silver investing boot camp, online, remote, 100% remote, so you don't have to travel to get to it, and there's no additional cost. It's just 99 bucks, and you'll be supporting our channel as well when you sign up. So let's see if there's any questions that I can answer here in the list. I already warned Andy that people are wanting to know where the price of gold is going in 2023. And also Peter Frovine is asking, do most of the buyers of gold and silver believe we are dangerously close to a total market meltdown? Are they aware that all Western central banks are in deep trouble? We're going to be talking to Alistair McLeod in about a week about that topic as well. So glad that you guys are here. Glad, keep submitting the questions, and I'll keep gleaning them from the list, and we'll get them in front of Andy as soon as he's back in. Hold on, he's probably waiting for me to admit him. Hold on one second, guys. Not yet. Okay. So it's interesting, a lot of the experts and analysts that we've been talking to about 2023 outlook, everywhere from Craig Hemke from the TF Metals Report and others, contrarian investors, et cetera, have been talking about wild volatility that they expect to be happening since we're coming to the end of a bull cycle. And in a lot of these pressures that are facing the markets, for example, are we going to continue with runaway inflation? Or are we going to go into a deflationary collapse with the stock markets dropping, real estate dropping, bonds dropping, et cetera? So lots of volatility ahead. And if you want to submit questions for me, yep, Neil is asking about platinum. I know Andy was looking up. In fact, I'll go ahead and reflect one of the things he was saying. There was 2 questions submitted on the availability of platinum eagles. And here comes Andy joining us. So he'll be with us in just a moment. And welcome back, Andy. We're talking about platinum before we get into the big picture of the economy. So you were saying availability of platinum eagles is basically scarce as hen's teeth in our current inventory.
Yeah, well, it's been that way really from the U.S. Mint for quite some time, Dunnigan. Really, I mean, of all the products they issue platinum eagles in the smallest of quantities, and they're hit and miss. So yeah, we haven't seen the 2023s yet. We're sold out of 2022s and have a handful of assorted backdates. They're tough to get. everything out of the US Mint has been tough to get. The Platinum Eagles really exemplify just how difficult it is to get certain products, and that's at the top of the list for sure.
We wanted to, if we could, first of all, welcome back. Happy New Year. And wanted to get your macro view of the global economy and then zooming in on how the markets, the metals markets, perhaps in particular, are likely to fare in the environment that we're finding ourselves in 2023.
Yeah, you know, it's interesting. You look at the way that assets are allocated here, at least in the United States. And we've talked extensively about the macro picture around the globe and the emerging countries and the BRICS and all of the things that we talk about so very often. But bringing it closer to home, when you look at the way that assets are allocated into things like pension funds, insurance companies, 401k administrators, they've always followed a 60-40 mantra, where 60% of the assets are invested in stocks, which we know the S&P 500 was down over 20% in 2022, and 40% in what would be the conservative side of the equation, the bond market. And when I started in this industry, and for most of my career, the verbiage was risk on, risk off. We are able to invest in risk on assets like securities when we're young and working and making income and have time on our side. And we transition to bonds, the risk off portion of our portfolio or of our asset structure as we get older, in terms of a guaranteed source of income backed by the credibility of the government. That was always the way that it was. And we've talked at length about how stocks and bonds have lost their inverse correlation, but let's dig into it just a little bit deeper. You know, rates were pushed for so low for so long that the inverse correlation between stocks and bonds has been severed. Whereas if rates rise, both stocks and bonds are massively affected. So let's look at what happened in this interest rate rising environment here in 2022. The risk on portion of the portfolio, S&P 500 down over 20%. The risk off portion of the portfolio, let's call it the 10-year treasury, had its worst year ever in the history of the 10-year treasury, the biggest drop ever, 16%. And when you talk about the 60-40 split, it had its third worst year ever on record. And so you have an environment where the traditionalist, who has done very well, admittingly, for a very long time, watched their stocks get hammered. And the one area that all of these advisors are invested in and believe that it is gospel are the treasuries. And as rates rise, those treasuries start to lose money. And at what point do those fund managers really relinquish their bond holdings? At what point, as rates continue to rise, do those bond holdings get sold off, only increasing the rate rise? And, you know, it's interesting. We saw a whole bunch of 10-year debt get gobbled up the other day. And I just had to ask myself, who in their right mind, other than the Federal Reserve, would be buying this debt, which is yielding a negative real return? And so when we talk about the prospects of the public becoming keenly aware of alternatives like precious metals, it won't take much more of an environment where we see the 40% allocation, the risk off allocation to the portfolio doing as bad or potentially much, much worse as rates continue to rise and bonds are sold off. It's a very precarious environment here in the US, and something that most investors really haven't had to deal with, where both ends of the portfolio are getting hammered simultaneously. You know, doing a little bit of research, it was interesting. You know, the Dow Jones has been in existence since 1896. And you know, I don't think most people realize that it's been around for so long. And if you look at the entire history, one thing becomes very obvious, and that is that Wall Street loves low rates. And certainly we've seen a period of low rates now since, let's call it 2008, or the end of the 2008 and 9 great financial crisis. And At the end of the 2008 and 9 financial crisis, the recipe that the Fed used, the medicine that was given to the ailing, sick economy, was to print money like madmen. And, you know, I think most people would be surprised to realize that the Dow Jones in 2010, at the end of 2010, was priced at 10,600. And so it took, in essence, 114 years for the Dow Jones, starting with, I think, 10 companies, culminating to 30 or so companies. Now, 114 years to get a closing rate of 10,600 on the exchange, or on the Dow Jones Industrial Average. When you talk about a Fed expansion subsequently of nearly $8 trillion in interest rate assets to suppress interest rates, to incite speculation, shut that off, sorry about that, to incite speculation into things like real estate and equities. In the ensuing 12 years, we saw a 24,000 point rise to somewhere in the neighborhood of almost 35,000. So when you talk about an illusionary world that we live in here in this country, we have a whole generation of investors who have been under the assumption that things will be okay, that the Fed will make things better, that they'll come in and rescue. Not only are we witnessing really, really, really bad performance in the markets, you have to understand where we're starting from right now. At the end of a massive expansion of the money supply, massive suppression of interest rates, to where everything is illusionary, created by over $8 trillion worth of purchases, to the point where the Fed balance sheet at the end of the great financial crisis stood at 800 billion, and earlier this year was at 9 trillion. And those assets are all interest rates. Treasuries, mortgage-backed securities, when the Fed buys them, interest rates are suppressed. And all of this money has found its way into financial assets, creating huge distortions. And I think what we saw here in 2022, as rates continue to rise, as the economy continues to see a contraction of credit, you know, part of the low interest rates and the easy money has allowed companies to buy back their shares with borrowed money at next to nothing in terms of interest rates, pop the share price extraordinarily high, make huge bonuses, create a perception of value, even if they weren't manufacturing any value. And this illusionary environment has spiraled through many facets of the economy, and in particular, many facets of the markets. And I think people need to wake up to what will happen if this continues. And I think we'll see it only accelerate. When you look at public's not prepared for this, right? Right now, we have the highest amount of credit card debt, really, in a long time, the fourth highest in this last century. And, you know, you have credit card debt at all-time highs as interest rates are rising. People are living on debt and rates are rising. The average credit card right now is yielding almost 20% interest. This is a recipe for disaster. So I don't know what to say much about the economy that we're in right now, only that I think it is only just beginning. The pain is just beginning, just as bullish and euphoric as low rates and easy money for the past almost 15 years has been. It will be equally as bearish, I think, and frightening as we see credit reined in and interest rates continue to rise, and the daisy chain of bankruptcies, forfeitures, and just the contraction of all of this craziness, this illusionary growth, tries to find some sort of equilibrium in terms of asset prices with interest rates that have been in make-believe land for a very, very long time. So what is the U.S. economy? The global economy is one thing. The U.S. economy, I believe, is on the ropes. And I don't see a soft landing anywhere in sight. In fact, I think anyone who talks of a soft landing, thinking that there'll be a small recession in the beginning of this year, and then we'll transition, everything will get better, and the Fed will come in and pivot and make everything better. That's all I think that's all make believe. And when you talk about a Fed coming in and pivoting, it only adds fuel to the fire of all of these countries that are joining together to move away from the West, to move away from their inflationary agenda, to move away from the hegemony, to move away from the hypocrisy. And I think it's just the very, very, very beginning. And so when you talk about the central bank purchases, what's the only asset that every central bank owns? It's gold. And so I think that what you're witnessing is a massive amount of accumulation by the biggest money in the world, the most since 1967, when the dollar was on the gold standard, because they are all front running just that question. They see the handwriting on the wall. They see the fragility of the economy. They see the fragility of the dollar. They see the transition away. And I think, as I've said for quite some time right now, the massive drawdowns off of the world's exchanges betray the price tremendously. So I wish I were a little bit more optimistic for what 2023 holds, but I am not. I do think that it's going to be a bumpy road, and I think it starts here pretty soon.
You mentioned accumulation of gold by the world central banks, the only asset they all hold in common. Gregory Mannarino from traderschoice.net always talks about become your own central bank and own hard assets. It's been difficult for people to get their hands at times on assets, especially our gold and silver physically from the U.S. Mint in particular. Chris says, question, what is going on with the U.S. Mint? They can't get silver or gold out.
Yeah, it makes no sense whatsoever. There are a lot of conspiracy theories out there that they're stockpiling it. But, if you wanted to mitigate the public's exodus out of the dollar and into things like gold and silver, I guess that would be one place to start. But of the 6 major mints out there, the United States, Canada, South Africa, Australia, Austria, and the United Kingdom, by a massive, massive degree, they have been the most underperforming, underwhelming mint, period, not even close. And the premiums on gold eagles, gold buffaloes, and silver eagles, while they've come down a tad bit, they're still stratospheric compared to anything I've ever seen in my career. The other items, the other coins, the other 5 major mints, not only have their premiums come down in what we talked about last week, but the disconnection between the price of all of those 5 mints and the US mint, which used to be this big, is still huge. It's a massive gap. And they've really never given us any explanation. In fact, Janet Yellen went on I think it's a video on the US Mint website saying that we ramped up production tremendously this year. When you look at the amount of silver they produced, I don't know exactly what it was in 22 yet, but my guess is about 15 million ounces. I saw them do 40 and 50 million repetitively a decade ago. The ability to do 3 to 4 times what they're doing is there. And not only have they underproduced, the premiums have been ridiculous. And those premiums are not part of the US Mint, but part of the primary distributors who have contracts with the US Mints, who realize that the trickle flow of product is so far below the amount of demand that that's what supply and demand dictates. Now, I've been very consistent on your show and others saying, look, the US Mint in many ways has defined my career as one of only 27 resellers in the world authorized by the US Mint. I tell people, don't buy them. They've been too expensive. And there are reasons people want to buy them above and beyond my advice of paying too much. And I respect and understand that. But it's been a great source of frustration and confusion to me and others, why the other 5 mints, half of which are across the globe, are able to get their act together and provide product to the United States at a fraction of what the mints, the US Mint in West Point, New York, can do for its own people. It's really too bad, because I know most people, if they had their druthers, would purchase all US Mint product, and I understand that. It's just hasn't been very economical or available. And you know what? It's been this way since 2020. Normally, when we see anomalies in price or in product, they are short-lived. This is going on 3+ years and really has not shown any sense of really abating. Yeah, they've come down a bit from where they were, but they're still ridiculously priced. And twice the price and premium from just about every other major silver coin, and several percent higher than most of the gold coins.
The natural question that many who are purchasing those or considering purchasing them now, and for the last couple of years with these higher premiums ask is, what do we expect from past observations to happen to that premium differential as the spot price might increase? So if we theoretically look towards a spot price of $30 or $50 or whatever for silver, what do we, from past experience, when there was a run up in silver, expect might happen to the differential in premiums between American minted gold and silver coins versus non-American minted gold and silver coins? Is it nobody can tell, spot premiums have a life of their own, that's the only answer? Or do we expect that differential to maybe to continue or to continue to widen?
Yeah, that's a tough question, because here again, this is behavior that we've never seen before, ever. And, look, let's just call it what it is. Silver is a very, very, very important strategic and monetary asset. And I think this is why the BRICS countries have been buying, amongst other things, silver. Everyone talks about the BRICS buying gold. India has imported, 300 million ounces this year. That's roughly a third of global mine supply. And I think this is one of the biggest reasons why there is so much more silver physical demand. And that's been manifested by the vault drawdowns. We've talked about this, and the exchange for physical behavior, where in order to keep COMEX stocked with what little supply they have, the 6 million ounces, 1/10 as much as India imported this year, they've done the exchange for physical, where they take those COMEX contracts and exchange them for physical off the London Metals Exchange, which is seeing their silver drop down to the lowest level since they started keeping record. But look, silver is being bought by the big countries and by the big money, and it will continue. They will continue to do so until there is none left in the weak hands. They are using the price suppression on COMEX to gobble up all of the physical. And as my good buddy Bick Swear often says, with the click of a mouse, they can drop silver to $4 or to $400 in a heartbeat. And when all of the silver is gobbled up, you'll see it go from wherever it is, bang, straight up to maybe something like 400. And that's, people talk about that being some sort of crazy projection. Let me just take my calculator here. A lot of projections are talking about gold going as high as 3,000, 3,500 here in 2023. Mainstream banks are talking about this. Put it at 3,000 and divide by 42, which is the average of the past 200 years. That's $71.50. Take 3,000 and divide it by 7, what it's coming out of the ground at, and you got $428. So is it crazy to think silver could go to 400 like that? No, it's not. And in particular, when you realize that the biggest money in the world is suppressing the price to accumulate it. You see, people focus too much on the suppression and don't ask why. That's the most important thing. Why is it being suppressed? Who's using that tool to their advantage? And I do believe that when you will know when strong hands have all they need, and that's when the price goes to the moon. And so people talk about, well, I can still get product. Great. Yeah, the product's gotten a little bit more available now. This is what we've been talking about, really, you and I, since 2020. But when you see the biggest exchanges on the planet being drawn down to levels that no one's ever seen before, in a massive shift, all of it going eastward, you need to open up your eyes and realize that this is a global transition. This is a once-in-a-generation transition. And the fools in the West are relinquishing custody to the smart people in the East, who will use this as a foundation, not only monetarily, but also industrially, for the new BRICS system that will be backed by a basket of commodities. It won't just be gold. It won't just be silver. Maybe it's wheat. Maybe it's oil. Maybe it's sugar. As we've been told, I truly do believe that this is why you are seeing all of these countries accumulate tremendous amounts of metal, the most since 1967, and only people are talking about gold. Let's not forget that we're seeing huge silver drawdowns as well. And as the silver draws down on the exchanges, it's going up commensurate in countries like India. So what does that mean? that means that the demand for silver and gold at some point will catch people's attention. And maybe that's in coordination with the market collapse. And when that happens, it ain't going to matter what you have stamped on the coin, whether it's an eagle or a maple or whatnot. Now, to be fair, and we've talked about this before, what Jim Sinclair had talked about. Jim Sinclair had talked about his belief that at some point metals would be confiscated, and anything with an American stamp on it would be safe from a future confiscation. That's hyperbole. That's opinion. Hasn't swayed me enough to sell my items that aren't American made, certainly. But look, those are the kinds of reasons that have allowed even anyone to be buying silver eagles at these stupid prices, because there are people who believe that it is the only road to safety. Now, I'm not saying I agree with that even in the slightest, but what I am saying is that there are people paying these premiums, and I'll say, hey, you should buy something else. No, I want the eagles. So in the end, when silver's $400 and you can't find it, will that eagle stamp be worth something? Don't know, but it's not compelling enough for me to recommend it to my best clients or to accumulate it myself. Now, I always did buy eagles. It comprised most of what I own, but I've been buying them for 30 plus years. And it's not been but just the last 3 years where we've seen distortions in everything in this world, in financial assets, and in particular US mint products. So to the gentleman's question, fair point, fair question. The what if questions are the hardest to answer, but I would simply say that, in my opinion, the increase in premium over something like a maple leaf or a Kruger End or a silver bar right now, I don't know that the benefits are commensurate with the huge cost increase. Maybe they are in the end, but I have a hard time swallowing it right now.
Yeah, the other thing that you mentioned were, as we try to imagine what could be the reason for the potential price manipulation that we're observing and have been for some time. We've interviewed Bill Murphy from GATA.org, the Gold Antitrust Action Committee. He and his co-partner Chris Powell have been documenting those hijinks on the COMEX at least for a long time, as is Ted Butler, et cetera. One of the theories about that is that desperate times call for desperate measures, and as a aging and waning and failing and fading empire, the West tries to defend what is indefensible, and that is a fictitious fiat currency, that that the full faith and credit of the United States comes into question in people's mind if they realize that everyone's flocking into gold and silver. So that's another possible reason to help keep defending it, even though it makes no other sense. Is to protect your power position. I don't have any comments on that before we get on to our next question.
First of all, and I mean this to the bottom of my heart and soul, all of us, whether you know it or not, who own gold and silver, owe a debt of gratitude to Bill Murphy and Chris Powell. Two tough dudes who have stood up to a lot of things, including threats and big institutions, and have been a beacon of light for a very long time. I and my firm have been a supporter of Chris and Bill for a very long time. I love both of them, and we all owe them a debt of gratitude for trying to expose and doing a good job of it, the manipulation that has been validated and verified. And it's still a tough grind for those guys. And I only hope that they're still doing what they do when we see real price discovery. I love those guys. But yeah, this is a situation where the manipulation in the markets has made it very difficult for people to really understand just how valuable these metals really are and what place they have in people's portfolio. They're massively underallocated right now in people's portfolio, right at the time when the biggest money in the world is voraciously accumulating. Mm-hmm. And it is because of the suppression. And God bless Bill and God bless Chris for standing up to these people. And I only wish them the very, very best. And I do think that if you own gold and silver, you owe them a debt of gratitude. I know. Yeah. I do.
One more badge of honor you didn't mention there, but I thought you were about to, was that they also have the distinction of being blacklisted blackballed by mainstream financial media. They're no longer, they're persona non grata, not welcome to comment on media, and they don't get their calls returned anymore once they started exposing things that were a little too close to the nerve. There's the other question you mentioned about BRICS nations accumulating this flow from the west to the east of physical precious metals over the last several years. That raises the question about how long does it benefit the BRICS nations to allow the system to persist, the existing regime to persist as much as it is. There's a question from Sarge 27271 who says, how fast do you think BRICS wants to pull the plug?
Not very fast. I think they're doing things methodically. They're putting the pieces into place. I mean, if you look at the way they've done things, they're continuing to put it into a place until we'll wake up one morning in a chokehold. And not before. I mean, look, China still has, I don't know how many trillions of dollars worth of our dollars, our treasuries. Look, they've been selling them at a voracious pace. Last I looked, maybe 150 billion in the last 8-9 months. So they're selling them, they're offloading them, but they don't want to cut off their nose to spite their face. But what you're seeing is a continuing rallying cry. All of these countries are beginning to new names pop up every day to join the BRICS group. And one of the things that they're doing in the meantime is, you know, the BIS said every country has to have a central bank digital currency before 2025 or by 2025. So like Turkey just rolled out theirs just the other day. And this goes hand in hand with the M-Bridge that China and United Arab Emirates and one other Asian country developed the M-Bridge, which is a cross-bank method of trading central bank digital currencies, usurping or sidestepping the SWIFT system. So until they're ready to say, bang, here's our new BRICS currency backed by commodities using the technology of distributed ledger technology that the Chinese have all but perfected over the last several years with their digital yuan, I think they will start to gradually, slowly, and methodically not only strike deals that sidestep the dollar, but transact payments sidestepping the dollar in their new central bank digital currencies using the M-Bridge technology and not being subservient to the SWIFT system and the sanctions that have, I think, awoken all of our, let's just say, friends who are saying, hey, you know, everything else aside, you know, we need to have a back door. And so it has incentivized all of these countries not only to join the BRICS nations or the Shanghai Cooperation Organization or the Belt Road Initiative or all of these groups that are all coalescing and all doing the same thing, striking deals with one another, using now their own central bank digital currency, paying in gold, paying in their own sovereign currencies, but they're all doing one common thing, and that is doing it without settling in dollars or using the SWIFT system. And they're getting in position. And when they're all in position to a point where they can really challenge the West, I think they'll then flip the switch. And I give them credit where we think in such short-term days, weeks, hours, they've been planning this for a very long time, and they're going to do it the right way. And when they do flip the switch, God help us, it's going to be a religious experience. And when you talk about Powell raising rates and pivoting, that's all nonsense. It's a sideshow. When the world just forsakes the dollar, it's going to be something awful. You will see a deluge of dollars hit the shore, creating hyperinflation, which spikes interest rates to the moon. And if you think times are bad now, you know, hyperinflation the printing press meets the greatest depression of all time, hyper stagflation, hyper deflation, hyper depression, whatever you want to call it. And I think that if that happens, when it happens, how it happens, you know, it's not going to be something that we should all be wishing for, but I think it's on the table and it's happening and it's progressing. I don't know what the moment is. Mm-hmm. We'll all know when it happens, but the decisions by our administration are only incentivizing and increasing and expediting this process. When you have Biden get up on stage and speak to the members of the Paris Climate Accord, saying we are going to continue to move away from fossil fuels, when you have the prince at Saudi Arabia more or less laugh at Biden and embrace Xi Jinping when he comes to visit, you can see that they are moving away from the West. And why would they want anything to do with us when we are going green? And 85% of human population that will comprise all of the other countries and entities forming this coalition aren't. So the handwriting is on the wall, Dunnigan. In my heart, I believe that. But I don't know what trips the switch. I don't know, but I do believe they will not do it until they're ready. But they are now setting up these deals, first with their own central bank digital currency, sidestepping the SWIFT system. And I think the petro yuan will be the precursor to the BRICS currency as it pertains to energy settlement, because the petro yuan is immediately convertible into gold in the Shanghai Gold Exchange, which only further incentivizes these countries who don't want to be subservient to the dollar and to the West to find other trading partners and receive back for their oil that is, very important. You might want to receive something back that isn't being deflated, debased, destroyed, and manipulated.
I just noticed the time, we're halfway through the hour, and I wanted to give you a quick moment to let everybody know about this week's special, since we haven't mentioned that, and then we can get back to some more viewers' questions, because there's a lot more viewers' questions that have been submitted. But if you want to go ahead and just briefly let everybody know about the weekly specials, and then we'll get back to viewers' questions.
Yeah, we have the Valcambi Kilo Silver Bar at $2.99 over the price of silver. I love them. They're numbered. What this picture doesn't show is the number. And on the bottom of those bars, you would see a serialized number. They come in boxes of 15 and with 15 matching certificates of authenticity that match the numbers stamped on the bar. I love them. And for the past 2 years, it has been the majority of what I personally have been accumulating. And we're also doing the 2022 South African Krugerrand at $3.99 over the price of silver. These are premiums, half of what they were 6 months ago. These are in stock, both items in stock, available for immediate delivery. Those come in tubes of 25 and boxes of 500. And look, premiums have come down to a level I didn't think we'd see this year, but take it for what it's worth. It's as good of a value as we've seen in the better part of almost 3 years for any sovereign mint coin.
All right, we'll show those again near the end there, and we'll also have them in the description of the video if people want to refer back to that. But meanwhile, let's get back to some viewers' questions that have been submitted. There were questions being submitted about what you see as an outlook for the gold and silver markets for 2023.
Look, I mean, I see it again. Price is being betrayed by the drawdowns of the biggest exchanges in the world. And to me, I see nothing but it portraying for much higher gold price, much higher silver price. You can look at what, technical analysis, breaking through the moving averages, great cup and handle formation. All of these bullish technical indicators are great. Really what it boils down to is how it all plays out on COMEX, and does the manipulation end? I truly believe you can only successfully manipulate a market, done again by pushing it in the direction that it is going. And when the biggest money in the world is going to great lengths to draw down from the biggest depositories of gold and silver in the world, you should understand what that's telling you. The biggest money is always a mile ahead of everybody else. They're closest to the information. They're closest to the money. It's just like the picture behind me of Roosevelt. All of the wealthy people, when gold was confiscated in 33, sent their gold by steamship off to the safe deposit boxes in Switzerland. And so they didn't lose their gold as the public did. The big money, it's just like all of the sovereign entities, the governments, massively buying gold and repatriating it in 2017 and 18 before the BIS reclassified gold. So the big money, if you look in retrospect, it's very easy to see, oh, sure, they repatriated it from the Fed and the Bank of England. They went on a massive buying spree that following year in 2018, more gold purchased than in the 60 years previously combined. What are they doing right now? More gold purchased than any time since 1967. What's happening to the supplies on COMEX and LME? Lowest levels in a long time on COMEX only roughly 300 million ounces total of silver on COMEX, of which the majority of it is in strong hands, not for sale. People like me, I'm not selling it. So 36 million ounces on COMEX backing the price setting mechanism, the lowest level of silver in the history of the of record keeping on the London Metals Exchange, 140-year-old exchange. Days where 45 million ounces, or excuse me, 26 million ounces, 45% of all the kilo gold bars are delivered off the exchange. Who likes the kilo bars? Oh yeah, that's right, the Chinese. So look, you have to understand the concept of misdirection, the concept that we've talked about ad nauseum. And the biggest money is using the misdirection in price and in rhetoric to reposition. And, you know, if you don't see that, if you're not seeing these drawdowns and wondering who the hell's doing it, and if gold and silver haven't performed the way that we've all grown accustomed into, you know, cryptocurrency style gains and 3x, 4x in our equity accounts. So, you know, silver up just a measly few percent and gold flat for the year doesn't do it for people. Of course, it was at all-time highs in 2022 in the euro and up 7, 8, 9, 10% against the pound because the dollar's stupid strength has muted in dollar terms what gold and silver have been doing. And look at it from a standpoint of the last time that the dollar was this high, silver was under $5. So it's held up remarkably well in the face of a dollar that is unjustifiably strong. So all I can simply say to you is this: you have to trust your gut. You have to strengthen your fingertips and your grip on your conviction. And you shouldn't be buying it to get rich, because then your expectations just piss you off when it doesn't happen the way you think. But take a step back and say the biggest money in the world is going to tremendous lengths to accumulate the lion's share of gold and silver that is not reported to the mainstream. They don't report it. No one knows about it. And that's why we wake up and it's a whole new reality. And everyone's caught with their pants down because no one except the pimple on the elephant, us, see it. And even us question, is that really happening? I'm telling you, you do not see drawdowns like this. When metal leaves the COMEX, it has lost all liquidity from an industrial perspective. So the big money who is using it as an investment to perhaps sell to the industrials would not pull it off if not for it to be a one-way ticket eastward. And when you see these drawdowns coupled with the admission that central banks, not this central bank, but central banks have bought more gold this year than at any time in my lifetime, going on 60 years, and 300 million ounces delivered to India of silver, 10 times what is backing the COMEX price setting mechanism. And if you took every ounce in the vault of COMEX, all the COMEX vaults, every ounce of which the majority is in strong hands and not for sale, that's how much India imported this year. Do you not see that? If you guys don't see that, you're missing the boat. And to me, it gives me all of the comfort, or comfort's the wrong word, confirmation that I'm right in my heart. Whether people want to take my opinion, look, I take all the facts and I come up with an opinion. And that is my opinion. The facts are the facts. The most amount of gold accumulated by the central banks in the last almost 55 years. That means something. And that should tell you where prices are ultimately going. And they won't get there until they do. But when they do, you will realize that all the dum-dums with weak hands have let go and are back in paper only to suffer the fate that the herd always does. And that is being led to slaughter when the very few brave people who take accountability for their own actions and stand out on a limb, the contrarians, they're the ones who won't be a victim. And Rick Rule always says that if you're not a contrarian, you'll be a victim. And I believe that statement has never, ever, ever rang more true than it does right now.
You've mentioned both now, recently, and in other discussions in the past about the accumulation of physical precious metals by Eastern countries, by Eastern central banks, et cetera. Question from Tracy Cameron. When China buys, say, 30 tons of gold in December, whom do they buy it from?
where they're buying it from the Western exchanges. Where do you think all the gold is going that's leaving COMEX? A lot of the gold will find its way to the Swiss refineries. They're buying it from the Swiss refineries. They're buying it from COMEX. They're buying it from the LME. I don't know who he is in PAMP. I read it, I don't know, a few months ago, but maybe the president of PAMP Swiss. PAMP Swiss is like the biggest Swiss refinery, the most respected. He talked about record outflows all going to Asia. So they're buying it from Switzerland and the refineries. They're buying it from the COMEX. They're using maybe sovereign wealth funds to do it, or maybe the government's doing it themselves. But look, you know, Alistair McLeod, who you have on your show a lot, the numbers that they talk about, the 30 tons, that's hogwash. They're the largest accumulators, producers of it in the world. Alistair will tell you that they have closer to 38,000 metric tons, which would be 5 times what we supposedly have at Fort Knox, where he says the people hold close to 18,000. They are begging their people to accumulate it. It's on the back of buses. It's in every shopping mall is filled with gold shops. The people are buying it. The state is buying it. They're producing it. They're accumulating it. They're buying it everywhere they can. And the numbers that they give us are baloney. They have way more than we are led to believe. But where are they buying it from? Anywhere they can. The majority of it from COMEX, the LME, and the Swiss refineries, from what I understand.
Another question being asked here is about the timeline that people have been holding metals already. So people have been accumulating metals over the past decade. And we have an interview that just came out a couple of days ago from Craig Hemke saying his watchword for 2023 is extreme volatility and patience. A lot of people feel like they're getting, not only have been patient, but they're getting older. You've talked about you need to trust your gut, have strong hands. There's a point where individuals may feel that this is outlasting any strategy that they thought they had as far as being able to benefit from preservation of their wealth so that they can, you know, get a home or whatever this thing is. Your thoughts, because you've talked about this before, rather than using it as something to flip to try to get rich, it's wealth itself. Can you talk to us about your view of that philosophy of where does patience meet its limit as people are aging and waiting for the truth to be reasserted?
I get it. I totally get it. It makes great sense. You know, the old story of the tortoise and the hare. You know, go back to 2002. Gold was $250, and since then, it's outpaced the stock market. It's done better than the S&P 500. Silver was $3 or $4 or $5. Gold is up from 2002, and that's been a long 20 years, but it's up what? Almost ninefold, eightfold, ninefold. It's outpaced the market. So it isn't glitzy. It's going to be something that is a methodical rise. What it's done is preserve your purchasing power since 2000, since the dawn of time. But if we use that frame of reference, I don't think people quite realize that it's outpaced all of the stock market indices since 2000. And when does it switch? I don't know when it flips. When it flips and it moves up by $100 or $200 or $300 in a day, and silver by $4 or $5, $10 in a day, be careful what you wish for. And that's why I tell people, you're missing everything if you're buying it to get rich. Yeah, I'm keenly aware when silver goes up in value. I am aware of it, but that's not why I own it. I hope to God I never need to use it. I truly do. I hope to give it to my kids someday. I know that when they give it to their kids, it will have value. While the dollar is losing currently, what, 10% per year, 15% per year, if we listen to John Williams, you know, the money creation, the inflation, the debasement of the currency, it's ridiculous. And it's a situation where you can't, look, some people can't hang on. I get it. Maybe they bought it for the wrong reasons. Maybe they didn't. Maybe they just need the money. I understand that. And I'm not unsympathetic to the reality of that. But you have to trust your gut. You have to have a vision of what is happening. Look, this is a once in a generation shift And the dollar could very well lose its world reserve status, at least its singular world reserve status. And what does that mean? That means everything that's valued in dollars will catch a bid as the dollar dumps. Commodities in particular. Look what Zoltan Pozar says. This is the age of commodities. Bretton Woods 3. Look at what the biggest money in the world is doing. They are accumulating. And if any of them did it too quickly, it would only awaken the elephant, who would come in and cut off their nose to spite their face. The methodical acquisition of it, using price suppression to do it, to reposition, if you look at it from the proper angle, is incredibly bullish. And it's also incredibly frustrating if you don't. If you just, I was on another show the other day, and he says, when the market collapses, very often you'll see gold sold off. That's a popular mantra. Gold sells off because people throw out the baby with the bathwater. There's a lot of margin debt. They sell it to cover their debt, to cover their exposure to a market that's falling. And I said, no. That's damage control. That's an algorithm that the powers that be, in the same vein, they don't want to provide gold and silver eagles and buffaloes to the public. They don't want you to be incentivized to dump your dollars, to cash out of your bank account, and to go running. Look, the FDIC had a meeting, I don't know how many weeks or months ago, and there was an image of one of the members saying they're getting prepared for a bank run and they think it's going to come. And the big money understands this. So when the markets collapse, it's not margin debt being covered with the selling of gold and silver. It's the opposite of that. It's damage control. So one of these days, you will see the price go to levels that people, I think, will be shocked by. And with that, the wealth that will be created by a lot of people who have a lot of gold and silver, it's not going to be like you're going to be really psyched to put on your Rolex watch, go out in your new convertible, and drive to a steak restaurant when everyone in this country is destitute. And I think that's really kind of what people need to think about. Now, I hope it doesn't come to that. I never accumulated the majority of my career, gold and silver, because I was afraid of something like this happening. Everyone doom and gloom. No, I owned it as wealth that I would pass on to my children. That should be part of every portfolio. But I'm scared. And if you're not scared right now with what's going on in the world and what's going on in this country and what's happening to the dollar and the big party that's happening over there that the US hasn't been invited to, and we are in fact are only incentivizing greater exclusion from the party, then you are missing the boat. If you're buying this to get rich, you're missing the boat. That's the same mentality that pushed cryptocurrencies into stratospheric levels. And look what's happening now. Look what's happening with Binance now, the biggest crypto exchange. It's this close from being the next FTX, it looks like to me. So greed is great on the way up. Fear is a whole lot more motivating. And I'm afraid for my family. I'm afraid for this country. I hate to say it. I don't buy gold and silver to get wealthy. And if you are listening to this and you own gold and silver to get wealthy, wake up. You're making a big mistake. You want to get wealthy with gold and silver, go buy some leverage mining shares. Gold and silver are your wealth. Mining shares are a derivative of gold that can make you incredibly wealthy, but they're also volatile. So look, I think people need to understand that. And it's not just for doom and gloom. Let's say I'm only half right and things collapse and interest rates spike and asset prices collapse. And those of you who have wealth outside the system thrive, not just survive. Now you got a whole stockpile of gold that you sell at the top and transition into things that are now collapsing. This is how wealthy people get more wealthy. They buy assets when they're on sale. Assets feed you, liabilities eat you. And you have to know that when prices are low, that's the time to accumulate, not when they're high. And there will come a time to sell some of your gold and silver. And maybe that's when we see a rebound. But after things have already collapsed to a point where real valuations, real price discovery is in line with the cost of money. And it's been the manipulation of the cost of money, i.e. interest rates, that have created these massive distortions. So it's not just to save your ass if everything collapses. It's also to take advantage of opportunities that no one will be able to do so because they're trapped inside the system that is collapsing.
I wanted to take that opportunity. Oh,
You're on mute.
yeah, sorry about that. We lost your audio. I don't know why. As you mentioned, Rick Rule has always mentioned people to maintain cash liquidity, but also maintain bullion liquidity to do exactly what you said, and that is to be able to take action when others cannot. And that's exactly what you said. I see we're knocking up against the end of the hour here. Can you hit the specials one more time? I'll put the pictures back up and you can remind people what we have on special this week. And as always, guys, the quantities are limited on the special products. Sometimes they sell out in as little as 24 to 36 hours. So don't delay. I often get calls a week or 2 weeks later saying, hey, you know that thing you had on special? Okay, now I'm ready to get it. And we're out. So anyway, I'll put those up on the screen for you, Andy.
Yeah, Krugerrands 2022 $399 over spot, in stock, ready for delivery. Tubes of 25, boxes of 500, no order minimum. Buy them all if you want. And the Valcambi Kilo Silver Bar, my favorite bar. I've been really very fond of them for the last couple of years, and the value that they offer, the utility, the size, 32.15 ounces is a kilo. They're not too big, they're not too small, they provide good value, they're conveniently packaged, they're really beautiful. People love them. Those are $2.99 over. Those are my two favorite or the two specials for this week, but the bars in particular have been my favorite, my personal choice of accumulation for literally the better part of 2 years.
I told this story before, but I have to say again that we had a client who purchased one of those as a gift for a retiring associate at work who had put in a long career at the podium at this big retirement. They had CEOs from all kinds of companies there and everything, and he presented this Valcambi Kilo Bar to his retiring friend, and he said it was a showstopper. Everybody had been talking about all the history and the greatness and all the stuff, but he said it stopped the show because people just all crowded around because they wanted to see this, and they were just stunned with the beauty of this thing.
Look, man has been in search, and woman, but we have been in search of gold and silver since the dawn of time. It's in our DNA practically, and there's something very special about gold and silver. And the reality is that most people wouldn't know it if it fell on their foot, but when you show it to them, universally, it's a ooh and ah experience. And I've seen that a million times. And you know what's funny? I've been around gold and silver now for 33 years, and I still feel that way every time I see it. And there's something special about it. And maybe that's why you see such, why it has such a rich history in, you know, all the way back to biblical times. So not trying to get corny here or anything, but there's something special about gold and silver. And these bars are really neat. They kind of fit the stereotype of what you would expect it to look like had you never seen it before.
The other thing we mentioned was Rick Rule again. And folks, before Andy was able to join us this evening, I mentioned Rick Rule has announced just today that they're going to be having another investing boot camp. The last one was on uranium last year. This one is on silver, and it's coming up in early to mid-February. Look at the details in the description of this video. Also, we had posted it as a pinned message at the top of this chat. There's a link right there. You can go ahead and sign up. It's $99. And you'll be supporting this channel along the way. It's 100% remote. You won't have any travel costs or anything like that. And as with anything that Rick sells of all of his conferences and that sort of thing, he stands behind it 100%. If you don't feel you get the value, you'll email him, and there's no risk to you financially. So Andy, we always are grateful. I saw a whole bunch of comments I didn't mention. I was asking questions, but there was a whole bunch of comments saying, oh, it's Tuesday night. Can't get enough Andy Schectman. That's the tenor and tone of the reception that you get from our subscribers here. Our whole community welcomes you every week, and we're so glad for your presence here, giving us this insider perspective. Just give you the floor for one last minute here before we sign off, if there's anything you want to leave us with.
So I'm honored to be here. You're the best in the business, and I'm honored to work with you as closely as we have. Honored to call you a friend, and thank you to all the nice comments out there. Look, I'm not a genius, and I'm just as frustrated by the same things that frustrate every one of you out there. If I were going to leave people with one thought, it is simply this, that if you go back and look throughout all of time, the biggest, most influential people who are closest to the information are always front running what happens. And that's really what is happening right now. And yes, it's methodical. Yes, it's drawn out. Yes, it's taking a long time. But when you're trying to turn an ocean liner, it's not something that you can do very quickly. A speedboat, yeah, an ocean liner takes a very long time. But once it changes course, it's hard for it to ever go back quickly. And I think that's kind of where we're heading right now. We're in the midst of changing course generationally. And that's what you should think about as you grab on to your gold and silver with strong fingertips. Trust your gut, trust your intuition, and don't buy it to get rich. Buy it because it will be a lasting legacy, not only for your family, but maybe your next generation. And if not, maybe it just provides liquidity to take advantage of opportunities that others won't have the ability to do, because us contrarians represent such a tiny minority out there that there's something to be said for being different in a world where being common and being part of the herd isn't always the road to salvation. And in fact, maybe it can lead to places that we really don't want to be. It's time for people to take accountability, and that includes with their finances too, because we're accountable for everything we do, everything, all of our actions. Take accountability for your finances and look at gold and silver as wealth you hope you never need to use. If you do, you're darn glad you have it. And it isn't just for an emergency, it could be opportunity. So anyways, look, Dunning, and I love these. In fact, I like these better than when we record our episodes Tuesday afternoons, but I'm always willing to do these, even at the drop of a hat. I think it's great, the give and take, and to hear what people have to say and the questions that they have. So thanks for letting me be a part of it tonight, and everyone for letting me be in your house. So I hope you all have a great rest of the evening and a good week, and we'll look forward to picking up where we left off next Tuesday.
Two last things. One, thanks to everyone who joined in on watching this with us together, and those especially who contributed questions in the live chat. I apologize sincerely and personally to every one of you whose questions we didn't have time to get to tonight. Please bring those questions back, or new questions back, next time that we do one of these live streams. We'll try to get to it then. And Andy, I'm going to give you one little poke in the ribs here. You said you didn't accumulate silver out of fear, but I have to say, yeah, you were afraid of your dad firing you, which you threatened to do when he took you on in the company if you didn't buy something every 2 weeks.
Well, it was the greatest gift he ever gave me. He gave me the gift of paying myself first and of savings. And I tell every single person that comes to work for Miles Franklin, it is the best thing that's ever happened to me. The best gift my dad ever gave me, without giving me anything, was the ability to save and to pay yourself first. Because you know what? I started when I was barely 20. And you wake up one morning and you're 52 with gray hair, and how the hell did that happen? And knowing that I have been saving every 2 weeks for almost 33 years is the best gift I've ever been given. So for all you out there, do it. Accumulate when you can. Tell your children to save, to pay themselves first before they pay their bills. Pay themselves first, even if it's $1. Do it. You'll wake up one morning and you'll be old like we are, and at least you'll have something to show for it. So anyways, thanks, Dunnigan. Always nice to chat with you, and I hope everyone has a great evening.
Blessings to each and every one of you and your families, guys. I'm going to end the live stream here, but thanks for being with us. Make sure you share this video widely. Click the like button, subscribe, and sign up for our free newsletter at libertyandfinance.com. And you won't miss a single interview with Andy or any of our guests. Andy, thanks for joining us.
All the best.
Okay, the stream